Hello and good morning, everybody. Hi, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. And today is Wednesday, ladies and gentlemen. Today is midweek, and we have some interesting developments happening. I would say the markets are a little bit on the calmer side. This doesn't happen very often, and sometimes when this happens, you're kind of starting to think, is it like a calmness before the storm or something like that? So, we did get the State of the Union speech yesterday, so we're also getting the nvda earnings. Again, like I said, we don't have major economic data sets coming through this week. However, we're watching everything very closely. Like I said, to me it always looks like calmness before the storm. Look, about the markets, we'll talk right now. Hopefully you'll enjoy the session, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Wednesday, ladies and gentlemen. Yes, the 25th of February, 2026. Look, it's an interesting week, a quiet one, as why it's interesting, because it's quiet. I don't know, you're kind of used to all the time some sort of craziness happening everywhere. But yeah, look, it's one of those weeks. We did get the speech, the State of the Union one, and we are getting the nvidia earnings as well. But in general, I think that whenever there's not much geopolitical tensions happening, it's like a weird calm week or something like that. Anyway, look, we'll dig into all that. Look, before we go any further, as always, let's quickly have a read through our risk disclaimer. Let me just find it very quickly. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm just going to check up on a few things here. Yes, the market, I can see that it's exploding right now as we speak, so the FTSE is just out of this world, honestly. Look, also just a quick mentioning of our Markets.com website. Let me just put this one on the screen. Yes, Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, I want to kick off first with the economic calendar, because again, it's a little bit on the quiet side. Let it refresh a little bit here. I'll give it another refresh, because sometimes I've noticed that it stalls a little bit. So look, quickly, just a quick recap of what happened on Monday. So the main kind of focus was on the speech, Fed Waller speech, Christopher Waller. Then we had some factory orders coming through in the US. Those month-on-month figures came out worse than expected even. And not to mention the previous number, plus 2.7, and it came out minus 0.7. Dallas Fed Manufacturing Index came out at a little bit better, but yeah, still. Look, the Chinese loan prime rate came out. No kind of surprises there. The usual stuff, kind of the same numbers here. I mean, they're not changing it and they're not moving it, so I think that for now they're quite comfortable with it. Then on Tuesday, yesterday, we had some other Fed officials speaking, but then again, Waller took the stage. CB consumer confidence, that's the number that I was watching, the 91, it came out at 91.1. So basically kind of showing some good kind of progress here in a way, so the number has been a little bit on the subdued side, a little bit on the lower side, apart from October, of course, but now it's kind of pushing back above 90s. So in a way, that's good, right? Let's see if that, if this continues. But in general, it's very difficult sometimes to look at these numbers and kind of take them for face value, because the economy is doing quite okay. But I think what's doing quite okay, it's the companies. The people are actually, I wouldn't say that they're better off maybe, but The stocks, yes, the stock market is performing quite well. That's great, wonderful. Everything's kind of nice and dandy. But again, it's the companies. There's not the people. It's the companies that are performing quite well because again, we know that the tech giants are doing deals here and there, and everything is kind of rotating around that. So look, long story short, for now, like I said, what we're watching today, we saw Australia coming out with their inflation numbers. Those are a little bit on the higher side. So the headline year-on-year number came out. So you can see that basically it's a little bit, how to say it? It's a little bit it's a little bit on the higher side of what the RBA would like to see, and I think that this is where the RBA is kind of justifying why they're going for those hikes, and we know that during the next meeting they're probably going to go for another hike as well. Again, we'll see. Of course, we'll see. We saw, but again, like I said, for now, I think that the RBA is doing the right thing. In my opinion, it's like one of those central banks that's kind of has it kind of everything. It seems like they have it all under control, and it seems like they're actually the rational ones. So what can I say? For now, like we're following them. We'll see what's going to happen next, but certainly we're it's very interesting, like I said, to see that they're one of the top developed central banks, and they're going right now the other path that all other Western banks, central banks, are doing. So, which is, like I said, it's nice to see that there is common sense out there, and I think that like I said, the RBA is probably one of the more logical ones at this point. At least it seems like that. Time will tell. Certainly, can't say anything. Anyway, going further, ladies and gentlemen. So today we got the GfK consumer confidence figure from Germany. It's a bummer again, minus 24.7 against the minus 23 expected here. Yeah, look. What else do we have? GDP growth rate, the final one from Germany, better. Yep, no doubts there. But certainly there are some questions. Anyway, going further today, we're gonna get the that's an interesting number that's coming out. FDA, foreign direct investment in mainland China. I'm really interested to see what's happening here. If the number is a little bit on the higher side, well, actually, that could be, could be showing that China is the economy, the second largest economy, and it is, despite all the pressure from abroad, from pressure from other Western countries. I think that they're, developing. They're actually on the right path, and we know that the German leader right now is in China to make some deals. So I think that everybody's kind of in Europe, everybody's worried about the U.S. Okay, the whole Greenland situation kind of calmed down a little bit, but will it repeat again? Because nobody knows. So yeah, it's an interesting moment that when initially you're pouring dirt on on somebody, and then actually you understand that you actually need them, because you thought that you have a stronger friend, but time shows that you need to be more diplomatic, in terms of like who you're dealing with. Anyway, and yeah, it's like I said, it's the world of politics is just very, very dirty, like I cannot, and very two-faced, very like hypocritical. Anyway, you're because like I said, on one hand you're saying that this country is supporting another country which is running a conflict in the third country, and you're saying that the first country needs to stop supplying the second country with weapons and stuff like, or technology. But then at the same time, you actually go and do deals with, you try to do deals with them. So again, like I said, it's so yeah, anyway, the world is, like I said, the world is a very ugly place. sometimes. Look, inflation numbers are coming out from Europe, from the Eurozone, European Union actually. So, not the Eurozone, European Union. Yeah, 1.7 is the forecast. Basically lower, below the ECB's inflation target. Let's see if that's going to be the case, because if it comes out at 1.7, higher than 1.7, let's say 1.8 or maybe 1.9, I mean, I think this is where the market will could react. The euro could actually strengthen a little bit, because, again, that could lead to the fact that maybe not everything is straightforward as the ECB would like it to see. We know that Christine Lagarde is trying to jump off from the whole ECB role, the president of the ECB. I think that everybody knows that inflation could pick up. Yes, it's currently on the lower side, but I think that inflation could pick up, growth could stall, yeah, and unemployment could rise. So, and the other word for that is stagflation. Anyway, again, at the moment we're not seeing that, certainly, but again, everything can change very quickly. So keep your eyes on the number today. This is the headline year-on-year number. So let's see what's going to happen here together with the core. Actually, I'm interested to see what's going to happen with the core. Okay, so going further down the line, we have some EIA crude oil stock change numbers coming out today. That's kind of it. Thursday. What's on Thursday? BOJ, Japanese bond purchase, basically. Japanese government bond purchases are coming out. So this could be a little bit of a market mover. We have the President Lagarde speaking, actually, it seems here on the calendar tomorrow. Okay, that's going to be an interesting one. Consumer confidence coming out, also numbers to watch out for if you are trading something euro related. U.S. initial and continuous jobless claims. So this is something that we always keep an eye on. It is quite important. Friday we have some inflation numbers from Japan together with industrial production, retail sales. Yep. Then we're gonna get the UK car production. Now this is very interesting, because, again, it has been kind of not the best in a way lately, but or kind of in the past year. But it seems like it started picking up again. We'll see if that's going to continue. Yep. And then in terms of other kind of unemployment numbers from Germany. Now this is going to be quite interesting to see, actually, if unemployment number does go higher a little bit. If it does, then, well, blame AI. Going further, we have some numbers, inflation numbers from Germany as well. And of course, the US core PPI, US headline PPIs are coming out, and Canadian GDP figures. Some preliminary one here, and some final ones. So yeah, growth rate here. This is something that I'm going to be keeping a close eye on. Look, okay, what's next? Basically, ladies and gentlemen, let's jump into the charts. Let's see what's happening here. I can see, like I said, I have another screen here, and I can see that FTSE is just to the moon. Honestly, it is creating all-time highs right now. So, but I'll get to that in a bit. And Nikkei 225. Look, for now, it's working out nicely. I talked about this. I said wait for this range to break, and if we do break the upper side of it, the 58,000 zone, then kind of it could lead to some higher levels. There we go. Everything is on the right track. I think there could be some more upside on this, but hey, let's not rush into conclusions. Okay, let's for now, like I said, I'm sticking to the upside. And to be honest, if I be very much interested in higher levels, then I'm very interested right now in the 60,000 zone on Nikkei. I think this could be very attractive area. But again, what I want, the market doesn't always want, right? So that's why I'm gonna wait, and I'll play the wait and see game. But certainly, I'm leaning a little bit more towards the upside here. But again, 60,000 looks quite attractive, as a psychological level on Nikkei. Unless we start falling back below the 58,000 zone. Now, if we do that, then in a way, yes, it's time for a little bit of a retracement back down. Shanghai Composite, okay, this one's also pushing higher, but the only thing is, my problem here is that it traveled higher. It tested my downside line taken from the high of the 14th of January, or in other words, the current highest point of this year. It tested this downside line. It stalled a little bit on it, and it did pierce through it initially. But look, I said to you that I would prefer to see kind of this one sitting above this downside line. If we do remain above the downside line, then yeah, I'm going to go higher, and I'm going to go for that current highest point of this year near the 4,190 area. So this is not the all-time high, of course, but because the all-time high, look at this, we still have plenty of room here to go for that all-time high, 5,100, and basically roughly another 1,000 points that we need to do here on Shanghai Composite. But hey, I really doubt that this is going to happen. Anyway, let's jump into this is the Shanghai Composite Total Return Index. Let's jump into Dow Jones Industrial Average. So yesterday we saw we're currently seeing a little bit of a roller coaster ride. Look, I talked about this previously. If you remember, I said that if we do stay below this 49,620 territory, I'm going to lean towards the downside, and there we go. We did move lower sharply at one point, but then we kind of corrected here, back up yesterday. I think that everybody loved the what was that? Yeah, the Meta and AMD deal, basically, where it's like $100 billion deal on chips, in a way where Meta is going to take the chips, yeah. So look. Sorry about that, a little bit popped up, getting some pop-ups here. Look, what can I say? For now, the market did see this as a positive. Yesterday, let me just refresh the page here. Yesterday, yes, NASDAQ was the big winner, of course, understandable, because, if it's tech-related stuff, then certainly, tech is the driving force. Nasdaq will be the higher one, and yeah, it gained around 1%. Dow was the kind of the last the least performer from the top three, although it came very close to S&P. So it's almost the same basically. But yeah, anyway, we had a great reversal here to the upside. The question is, can we stay up there? Let me just double check what's happening right now with Dow, where it's currently trading at. 49,220, so basically above yesterday's close. We're currently there, yes. Look, I'll say it this way. We are seeing a retracement, that's fine, but for now, the main idea is this. If we're going to get something like this. So if we're going to, remain below this downside line, which is drawn from the high of the 12th of February, then yes, I will consider, FTSE 100, honestly, like this is just insane. What I'm saying is that if we do stay below this little downside line taken from the high of the 12th of February, then yes, there is a chance for another decline here. So what we're seeing right now could be just part of the larger correction to the upside before another leg of selling. Look, however, I'd still like my 49,620 territory. I'd still do like that one. And if we do push above it, that means we have broken the downside line. That means that higher levels could be met here, especially if we climb back above this highlighted territory, which is roughly, again, it's not the exact level. It's never the exact level. It's always the area around the level. And if we do clear this hurdle, then yes, great. I will go further north here. S&P 500 very quickly. Again, we're still in the box overall. We're still in the box here, and we need an exit. If I can get an exit, it's wonderful, great. But at the moment, look, I said to you previously, and I threw out this little piece here for our, I can't remember, was it the VIP clients or was it just a morning note? And basically, what I said, that given that we're in the box, if I need, in order to go lower, I need a clearance of the not only the 100-day EMA shown as the blue line here, but also the 6,700 kind of 70 zone here, and then, or 83 actually, we could start 83, 84, and if we can clear that one, then yes, great. Potentially more sellers could join in. But if we start climbing back above the 6,870 territory, 70, 71, something like that, then there is a possibility for a move to the upside, where like we could see maybe a move higher within the box, within the range here, where we're currently seeing the S&P stuck in. So yeah, keep your eyes on that. Let's see what's going to happen next here. For now, if you're a little bit less confident, you want a little bit more reassurance, then well, keep your eyes on the 6,909 zone right here, because again, that one could be an interesting option as well. Maybe, like I said, it could be even a better option, because again, this is the midpoint, like this is the 20-day SMA within the Bollinger Band. So yeah, a nice pop above it could kind of strengthen the idea of kind of further advance towards the upper side of the box. Nasdaq. Look, the problem that I have with Nasdaq, it's a little bit. I had this downside line, and it did break, and we had a little bit of a violation here and there, up and down. So it's kind of bullish, honestly, I don't like when something happens like this. I do like straightforward, clear breakouts. Yeah, it's not ideal for me, to be honest. However, look, I have to adjust, and that's for sure. That means that maybe this downside line was not really something to kind of to focus on too much. Again, maybe on the weekly side, it could have been a better option, to focus on it. So we did kind of violate it. So we're above this downside line on a weekly, as you can see here. So maybe this way, it's a better option to examine it this way is a better option. The fact that we closed yesterday above the 100-day EMA, which is roughly around the 24,945. That's great. The cash index right now is trading around above 25,000. Of course, it's trying to push further north, to be honest. I think there is a strong chance of doing that. So we're currently trading at around 25,000, kind of into 20, something like that. So yeah, for now, I will say this way, that I'm going to continue targeting the upside. I will aim for the 20-day SMA within my Bollinger Bands, and I'm going to aim for the 50-day EMA shown as the green line here, which is roughly around the 25,200, somewhere there. And then yeah, we'll take it from there. Look, my downside scenario on Nasdaq. Okay, the thing here is that I can draw this upside line, but again, it's going to be very tentative, very kind of, although I do understand it, the whole technical analysis can be tentative, because it really depends, it's very subjective sometimes. But yeah, look, for now, I will say this way, the better option maybe not to have this upside line drawn. Maybe the better option is to have a little area of support drawn right here, because as you can see, this whole area, basically, we kind of stalled above it. That's roughly around 24,633, something like that. Look, if we do drop below it, I'm going to start leaning towards the downside. This is what I'm going to do. I'm going to aim once again for that 24,455, and then we will just take it from there. In a way, some of you might say, but hey, why do you think that this is going to go higher here? On one hand, yes, because we broke the downside line. We're above the 100-day here, EMA on the daily chart. So kind of these things are pointing a little bit more towards higher levels. However, if we somehow, let's say, imagine this scenario, we get a pop, we move all the way here, test the 50-day EMA on the daily, and then we struggle to stay like near it. We start falling back down, and we fall back below the 25,000 kind of in 50 zone, or even better, we fall back below the 25,000 zone in general. And yep, that could, to me, signal that the bearishness is kicking in. You know, bearishness is like is something, because again, maybe the market is considering this as a possible maybe bearish flag here. Again, speaking purely from the technical side, maybe this is considered as a bearish flag because we have ourselves a pole here to the downside, and then we, you know, gradual correction higher. So could be the case, but yeah, I'm not in a rush to say that this is exactly what's going to happen, but again, I'm just considering options here. Okay, let's jump into Europe, ladies and gentlemen. Germany. Germany is kind of okay. Germany is kind of okay. Still holding on below this 25,100 zone. I talked about it previously. I said that if we do push and stay above it, I'm going to lean towards higher levels. We did push and we did climb higher a little bit initially, but then we failed. We failed to reach the all-time high, and look, if we do climb again above the 25,100 zone, I think I'm gonna go and aim for the all-time high again. However, if we're struggling with this 25,100, then maybe it's time for a little bit of a retracement again. Let's see. Again, it's the market is, like I said, we're watching that German data. We're looking at those unemployment figures. So, you know, if you're trading DAX, then certainly keep that in mind. Right. Okay. Where's that FTSE? Honestly, there we go. Look at this animal. Look at this animal. It is just unstoppable. It seems like that. Look at this. This is gold on a minimal level, you know. What comes up must come down, right? Eventually. What comes up must come down eventually. Look, what's the target here for me? 10,800. It looks quite attractive. Actually, I would like to see something like that. In general, what I want to see here is a major rally to the upside, very big spike, maybe even hitting the 11,000 zone. And then I would like to see like a reversal, a sharp reversal. But again, you know, that's me. That's what my preference is. The market doesn't give me all the time what I want, so we have to kind of, you know, take what we can. So long story short, for now, the fact that we popped above this hurdle, I talked about it previously. We popped above the 10,715, and it seems like we're on the right track to go and test the 10,800 again. Let's see if that's going to happen. At the moment, we're near key resistance. I can see here on my other chart, but certainly, yes, 10,800 does look quite interesting and quite attractive. And let's see if that's going to be the case. Again, if we continue to trade above the 10,715, if we somehow fall back below it, well, ladies and gentlemen, I think there's a possibility for a move to the downside. Actually, quick glance at CAC 40. Again, also an interesting all-time high here, as I can see. This is also, like I said, the French index here. It is also very much to the upside. This is Tuesday. I mean, this is quite delayed here, yeah, it's very, like I said, it's very delayed here. I mean, let me just try to find another one. I think it's gonna be this one. Yes, there we go. That's what I'm looking at here. Okay, let me just add this one here. This is much better. So this is another index that probably traders should keep an eye on, the CAC 40, the French one. And honestly, it is just spectacular to watch these, and, you know, like these all-time highs. And what I'm saying is that this is what I said in the beginning of the session. You know, you're looking at all this. The stock market is like at super highs. Everybody's loving it. Everybody's just like, wow, crazy. You know, the market is doing fantastic. Yes, the companies, because of all the AI. You know, the AI helps you cut costs and you know, cut people and. But actually, if you start looking at the labor numbers, they're not super. They're not great. So, who's benefiting? Yeah, well, not you and me, for sure. So anyway, long story short, for now, looking at this, I think that there could be some more upside on this one. 9,000, I don't know. This is an interesting question actually, because again, it seems like okay on the monthly chart, 9,000. It's not far. It's only 500 points away, so quite doable. Because at the beginning of this month we were actually at around a little bit above 8,000, and now we're 8,500. So we're doing 500 points. 425 points to be more precise. So yes, we are, like I said, we're almost doing 500 points this month. So to do another 500 points, maybe next month again could be the case. Let's see. Let's not rush into conclusions, but certainly for now it's up and away. However, I do understand the fact that whatever comes up must come down eventually. Let's jump into DXY very quickly. DXY, this one's a little bit annoying. I wanted to make a move earlier, but hey, this is like not happening. The market is not giving me that. But look, I'm watching this 97, or actually 98 barrier. The 98 barrier seems to be like a very strong one, and at the moment we are not really getting the breakout. If we can get that breakout, yes, so we can go a little bit more to the upside. But at the moment, we're not getting that. So long story short, for now, I will say this way that I am going to be very careful here. I don't like when it takes like longer than usual. Yeah, I think we need to be very careful because again, although this looks like an ascending triangle pattern, we need a confirmation break first. So if we can get that 98 break, then wonderful, I will go to the upside. If we don't get that, and if we do get a clearance of the lower side of this ascending triangle, then well, basically it's there is a possibility for a move lower here towards towards the lower side of this big range where we're currently sitting in. And I'll show you what I'm talking about here. So basically, look, for a few months now, to be more precise, since kind of May of last year, we have been moving sideways, and this looks a little bit more bearish than bullish, to be honest, because the prevailing trend on the monthly chart, even the prevailing trend is to the downside. Then we have a little bit of a consolidation here, so the greater chance to break out for this one is to the downside. However, a confirmation break here is needed, a drop below the 96 territory here, somewhere around here, because at the same time we could fall below the 200-day EMA on the monthly chart, and ooh, that would be quite bearish. So let's jump into the VIX, ladies and gentlemen. Just a quick glance at volatility drifted lower yesterday. Well, because yes, the market is doing quite well right now. So there's not much to add in a way. The highest point we saw in February was around here, 23.10. I think that there could be more downside here on this one, and I think that. If I'm leaning a little bit more towards the downside, that means basically the indices could travel a little bit higher. Let's jump into the forex world, ladies and gentlemen. AUDUSD. So this one is looking quite interesting and attractive, and looks a little bit more positive than negative. So a break of this downside line is needed. So I need to see a clearance of it. If I can get that break, this one's taken from the high of the 12th of February. Then yeah, I'll go to the upside here. Yep, nothing major. AUDNZD, I want to just have a quick glance. Look at this. I'm loving this one, and I need a monthly chart for that. There we go. This is what I talked about. And if you remember in one of the sessions that I covered, I talked about AUDNZD, and I said I'm going to lean towards this 50% here. What's the 50%? Well, but basically if we take a Fibonacci retracement and draw it from the highest point of 2011 and all the way to the lowest point of 2020, this is a beautiful retracement. This is a beautiful retracement that AUDNZD is doing after breaking that 38.2, which was fantastic. Look at this, very, very technical. Now we're testing this 1.18 kind of 95, or you can say the 1.19 zone. But then the big question is actually, are we going to stall here and then reverse back down, or is this kind of it? Is this where we're going to just break it and just go further north? Well, of course, there are some attractive levels here, but I think that there could be a little bit of a stalling moment here near this area, and then maybe we could, see a a little bit of a correction back down here. Let's see what's going to happen. AUDJPY, very quickly, there we go. We're flirting with the current highest point. Actually, sorry, not the current, previous now highest point of this year. And now the big question is, can we break this? So in general, this worked out nicely. Well, nicely-ish. Nicely-ish, because I wanted a little bit of a more clear push here above this 109.37. So we got the move, we got the break, we pushed higher. We did kind of violate this again, up and down here. So it was a little bit messy, but hey, if you have the nerves of steel, then you're not bothered with that. So we traveled higher. We tested this 110.79 zone. Congratulations to everybody. Now the next question is, can we go higher here? Can we break this 110.79? And if we do, if we can break that, wonderful. More buyers here could join in. So yep, this is what I'm going to do here for now. And certainly, yes, let's see what's going to happen here. Let's see what's going to happen here with this upside line, because this upside line has been running since November of last year. Good line, not gonna get rid of it. I think there could be it's a good area of support, but if it gets broken, well, the call. There could be some more downside to come. And let's very quickly jump into EURUSD. There we go. So really don't like these tails, these wicks on these candlesticks, and honestly, this is just not very reassuring. And look at this trading recently. This is wow. This is like, I don't know, speculation at its best. Anyway, but somebody might say, well, this is normal market trading. True. Speculation is part of normal market trading, to be honest. Nowadays. For now, like I said, this downside line is taken from the highest point of this year, the current highest point of this year, near the 1.2082. Look how far we have fallen. And in general, this looks still like a bearish formation. It looks like a descending triangle pattern, but again, what I need to see here is a drop below the 1.1774-75 zone right here, which is where basically the 50-day EMA is. And if we can get a nice drop here, I will be aiming for the 100-day EMA. So long story short, for now, this is what I'm going to do, and still looking at the downside scenario. But as long as we remain below this downside line. For the upside, pretty straightforward, a break of this downside line is needed. EUROCHF, very quickly, I do like this pair, and actually it's forming something what I really like. It's forming a pattern, it's doing this pattern where whenever we have a strong decline and then a gradual decline, this kind of tends to work out quite positively. So you normally kind of get in these patterns, what you get here is the like a falling channel moment here. So something like this. Let me just put it on the chart here. So yeah, no, I need to capture this one. There we go, and let's grab this one, and there we go. So this is what I'm talking about. So something like this. So you have like something like a falling channel. So again, theory does state that we tend to break to the upside on this one. But again, things happen. So look, the simple way of approaching this probably is this, that if we do fall below the 0.1995, I'll go lower. Very simple, because a forthcoming lower low will be confirmed. However, I do like like I said, I do like the potential idea of a break of the upper side of the falling channel here, and then yeah, we could take it from there. EUROJPY. This one's at an interesting spot. Now, after breaking this upside line here, it's now retesting the broken upside line from another side, which I talked about this several times, and I said too that this is one of the rules that I follow as well. Whenever you break a trend line, you tend to revisit it from the other side. So there we go. We got the revisit. Now the question is will it stay? Will it stay below, or actually is it time for a reversal? Not a reversal, sorry, but a push back up here. I'll put it this way: if we do climb back above the 884.92, 93 zone, somewhere here, I will slowly aim for the upside. Looking at, let's jump into actually the GBP pairs, GBP USD, and the next one I'm going to jump in is going to be my, wait, I forgot, not GBP USD, let's jump into my unfavored pair, Euro GBP. I want to, I want to check this one. Now, this is interesting. So this is one of the good examples of, whenever we break the upper side of the falling channel, we move higher logically. But then we found good resistance here near the 0.8746. Now, look, for now, if we do climb above this, I'll lean a little bit more towards the upside. But again, at this point, it is just, it's stalling a little bit here. It's drifting back down. It found good support near the EMAs, my EMAs, the 50 and the 100. So let's see if we can reverse back up here. If we can, great. I'll go for the upside. Let's jump into GBP USD, ladies and gentlemen. Look at this. Beautiful movement here back up. And it is a falling channel. We're still in there, but it seems like we're really trying to climb back up. Look, my upside scenario in this one is roughly from this 1.3591 zone. However, maybe I will revise that a little bit. Maybe I'll actually start shifting now my views to the upside from 1.3568, a little bit better here, and then we will just aim for this little hurdle somewhere here near the 1.3712, and then we'll just take it from there. For now, the downside scenario, I think I'll have to shift it from the 100-day EMA, shown as the blue line here. It's on my chart, it's currently around 1.3460, something like that. So it has been a good area of support lately. You can see that. So if we do clear it, yes, it kind of opens the door to potential further declines. GBP CHF, similar story like with the Euro CHF. It seems like it's starting to form higher lows. Can it go for a higher high? Let's wait and see. For now, I am, like I said, I'm keeping an eye on the 1.0477 here. If we can clear that, then great, wonderful. More buyers could join in. USDCAD, actually, USDCAD. Look, I talked about this little triangle pattern last week, and I said to that in my ideal world, I'm leaning towards the downside on this one, because I do believe that maybe we're not done with the whole Iran story, because again, 15 days were given, and maybe oil could rally again on that. So if once again tensions rise, oil will rise. Then that means that Canadian dollar could rise as well. So we're keeping an eye on this one. As you can see, the upper side of this symmetrical triangle pattern is holding, providing stronger resistance. In general, this looks like a little bit more bearish because the prevailing trend is to the downside as well. So a greater chance for this one is to break out lower. However, surprises happen. So for now, I'm not going short or long here. I'm just observing this one because it's way too. Because what could happen, we could see a push higher, a strong push higher, test this downside line, and then at the same time a sharp reversal back down, back into the triangle pattern. You get yourself a false breakout, and congratulations, we could see this one shifting back down here. USDJPY. USDJPY is looking quite interesting, and USDJPY here is at a spot where, yeah, it's breaking the downside line. So look, the Japanese yen right now is a little bit on the weaker side, because I think that we are seeing the Japanese government really kind of telling the BOJ not to go for those hikes yet, because they're trying to delay it as much as possible. So that's kind of weakening the Japanese yen a little bit more. Yes, it's helping the exporters, and this is where partially why the Japanese government wants it, because again it's weakening. Sorry, not weakening. It's benefiting the exporters, because the Japanese exports then become a little bit more attractive, especially cars, because that's a lot of stuff that Japan kind of exports. So Yeah, this on that hand is like right. On the other hand, you might be damaging your own people. So yeah, it's like I said, it's an interesting play here. So on one hand, what do? Do you damage your own people, or actually do you push one part of the economy to the upside? It's always a dilemma. Um, Long story short, for now, I'm gonna consider, like I said, I'm gonna consider higher levels, but only if we do push and stay above the 156 point kind of 30 zone right here somewhere, and we'll go from there. Quick glance at USDCHF. After breaking this is a good example actually. This is a good example because after breaking the upper side, the triangle here to the upside actually, because it's kind of killed the whole idea of when you look at the prevailing trend is to the downside before entering the triangle pattern, so the greater chance for this one is to break out lower. So that's why I keep on saying wait for the confirmation break. And well, there we go, we got the confirmation break, we're moving higher. We're currently resting a little bit above the 20-day SMA here on the Bollinger bands here, so in a way kind of pointing a little bit more towards higher levels. Look, we can get rid of this line. What I'm going to do here is I'm going to have this upside line here, and I'm going to mark I'm going to probably mark this one. Yeah, this is a little bit of a better option here, I think. Right, okay, somewhere around here basically, the 0.7718. I think that could be a nice interesting level to watch. If we can clear it, I think we can get a larger correction back down towards this upside line. Ladies and gentlemen, let's jump into the commodity world. Gold, look at this. Gold rebounded beautifully yesterday from the upper side of this little box where it was trading in. I talked about this idea. I talked about that we need to see a clearance. We need to see gold getting outside of the box here, thinking outside of the box. There we go. We got the clearance to the upper side. We traveled higher, and then yesterday we retraced back down. We tested the upper side of this box near the 5,092 zone. We rebounded, and now it seems like we want to go higher. Let's see if that's going to be the case, ladies and gentlemen, because again, 5,200 kind of 40 zone, I think, actually not 40, 50. This is the barrier to watch. So 5,250, if we clear that, I think it could open the door to some higher levels. Silver also pushing higher. It looks a little bit better than gold. Of course, we can see this by the ratio here, which is falling again, and we're at a very interesting spot here. And silver is dropping. Silver is getting a little more expensive than gold again, and this is where my question is actually: are we gonna, see this one falling all the way back to the 50s here? Where gold will be 50 times more expensive than silver, whereas recently it was around 70 times already, like going back closer to that 100 level. But yeah, I think it will take time until gold will become 100 times more expensive than silver. At the moment, silver is gaining. China has reopened, and we know that China is buying a lot of silver. So yeah, I think there's a good chance of this one traveling back up here towards the 92.20 zone. Look, if we clear this, I will go to the upside, ladies and gentlemen. This is what I'm going to do right now. In general, I said it before and I'll say it again: what comes up must come down. So looking at this monthly chart here, are we going to get some crazy moves like here, back all the way here? Well, I'm going to say no. I don't think so. I think what we're seeing right now here is a nice little retracement, and maybe we could see actually a drift back down. So look at this. I think the 50%, we need to do that for sure. Well, actually, nothing is for sure. Nothing is sure. Nothing is, guaranteed. So, but it does look attractive. So the 92.87, 88 zone here, I think it could be doable. This is the 50% retracement. So if that gets cleared, I think the next target is the 99.66, which is basically very close to the psychological 100 level. And I think it could be a nice, good target. For now, I'm aiming to the upside. Platinum, let's have a look at platinum, also pushing nicely to the upside. Look, with platinum, I have this this level here. This is the highest point of 2008. If we somehow push and stay above it, okay, I'll go higher, but my preference actually for the upside is from around here, from around this 2,478. But if we do clear this hurdle and stay above it, then yeah, I'll lean a little bit more towards the upside. Palladium is also climbing back up. Again, I think that the 2000 level is, you know, is on everybody's mind. Let's see if we can travel there. Copper, very quickly on copper. Copper is a little bit on the quiet side, so that's fine. Nothing, you know, to be scared of here. But yeah, in general, if we do climb above this 50-day EMA, I think that more buyers could join in. Very quickly on sugar, my beloved sugar. Oof, now this is a roller coaster ride, which I need to remove all the drawings here and start fresh. Now, one thing that I want to bring back here is this level, the 1405. I talked about it. I said if we do climb back above it, I'll go a little bit higher. We did go higher, 14.55, something like that. That's great, but now, look, 13.68, this is what I'm watching here. That's the current lowest point of February. If we do fall below that, more sellers here could join in. That said, we're seeing a sharp reversal, right? But now, if we somehow form a higher low, ooh, now this is something interesting. Let's see. WTI oil, we're stuck. I talked about this a lot. I talked about this in my VIP postings for our VIP clients, and basically I said that, look, keep your eyes on this downside line. This is something, you know, something important here, brewing. This is the highest point. It's taken from the highest point of 2022. So we're currently stuck here. We're stuck near the 200-day EMA on the monthly chart. We're stuck near this downside line. So this is a very, very strong barrier. The only thing that could break that barrier is an invasion. The U.S. unnecessary invasion, unnecessary attack of Iran. So yeah, but you know, this is, nobody's asking us, but anyway, this is something that we're watching very closely. So if you know, if they continue to escalate there, then certainly yes, I think more upside here could happen. We could see a break here. We're forming something of a possible bullish flag. Let's see if that's going to be the case. But yeah, it's a little bit choppy right now, but certainly, yes, watching this one very, very closely. Let's see what's going to happen with, where it could happen with Brent oil. Now, Brent oil did clear the same identical trend line here already, but it's still below another trend line, which is drawn from the highest point of 2024. So yeah, I'm kind of keeping that in mind. Natural gas here. Look at this. This continues to slide here, ladies and gentlemen. We're below 3 at one point. At the end of January, we were around almost 7. This was like, wow, speculation. But I think I think we might hit the lowest point of 2025, the 2.62 area. I think it's quite doable, but maybe we can actually even drop below it. So let's see. For now, this is looking quite bearish. Let's jump into the crypto world. Bitcoin, yes, trying to climb back up, trying to, you know, regain those losses. And at the moment, look, for me, the problem is here. I'm trying to understand what it's forming. It could be like a bullish flag, but a very extended one. We have ourselves a pole here to the upside and a very extended bullish flag, you know, where, again, like I said, could it be the case? Yeah, it could be the case. Is it the case? We don't know yet. So that's why what I'm looking at here is this. I would like to see a push above the 50% here retracement. Now this this retracement here, I'll show you what I'm talking about here. So this retracement here is basically this. This is drawn from the lowest point of 2022 to the highest point of this year, last year. And if we do climb back above the 50% here, above that 70,000 zone, I think it opens up the door to some higher levels. But currently we're resting on the 50-day EMA on the monthly chart. So it's a very good area of support, very respected here. And the question is, yeah, like, can we, continue? Is it strong enough? Or actually, are we going to get that drop eventually? Look, my downside scenario here is from around here, from around this 58,500 zone. If we can get a drop below that, I will go lower. Bitcoin Cash, I do love this one, honestly. Look at the recent decline. Boom, to the downside. We're getting a little bit of positivity. Let's see if this positivity can, last. Or actually, the downside scenario will prevail. But my downside scenario is actually preferred scenarios from this 445 level. If we clear this one, then yeah, I'm gonna lean further south. Ripple. Ripple is also doing something like Bitcoin. Basically, look at this. We had a sharp decline and then a sharp reversal, and now we're having like a gradual decline. So it looks like a potential bullish flag, given the fact that we're also holding nicely above this 1.3415 area. That's very interesting. We're holding above it. We failed to close below it. Interesting. And now we're seeing, some movement back up, especially the fact that we're climbing back above this inside swing high of yesterday near the 1.3676, something like that. If we stay above it, then I think there's a chance of a further move north. Very quickly on Ethereum. Yep, similar story basically. After breaking the triangle, we moved lower, but did we go for a lower low? No, we didn't clear the 1,744 zone. We started pushing back up. So long story short, I think that if we do break the downside line here, then yes, great. Yep, I will say if we do break this downside line, yeah, I think I'm gonna apply simplistic logic here. Honestly, I'm just gonna go higher. Very simple. Ethereum Classic, interesting. We're still holding above this 8 zone. If we do fall below it, I'm gonna go lower. But if we do stay, maybe we'll end up in a range here a little bit more. Litecoin pushing back up. Loving this price action here actually as well. Stalling above the 50 mark, the psychological 50 level. So if we do remain above the 50 level, then hey, I think there is more upside here. But if we start clearing the 56.64, something like that, then this is actually even better. I think more buyers here could join in. Dogecoin also reversing, at least it's showing some signs of reversal. Look, as long as we stay above the 0.0879 zone right here, yeah, I'm going to continue maybe considering a little bit of a larger correction back up. Polkadot reversing back up, great. And in general, this one has been, hit hard. Look at this. I mean, look at Polkadot in general. Look at this movement here. I mean, at some point we'll have to reverse. Maybe, going back to 3, 4 could be an interesting, option here. But certainly at the moment it's really looking kind of doesn't look very healthy. However, is this the bottom? I don't know. It's a little bit too early to tell, but certainly we are, trading near this level here, near when it launched. Basically, that's the lowest point of 2020, and that's roughly around what what was that level here? The low 1.4464. So we're basically below that level, and yeah, this is where. This is 1.4464. We need a clearance of this area in order to kind of get maybe a little bit more comfortable with the upside. So this is a very strong area of resistance. I need to see a clearance of that one in order to go higher. And finally, Tron. This one's climbing back up. So let's see if this is gonna if it can stay above the 0.2852 territory somewhere here, but the 50-day EMA right now is in the way. So if we clear this, I'll go for the 100-day EMA, and then we'll take it from there. Ladies and gentlemen, that is a wrap. Thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments. Too bad that there were no questions asked, but hey, look, if you still have any, you can throw it out there. But this live session is meant for questions, you know, because again, that's why I'm running it live, so to have a little bit of interaction. But look, but if you still enjoyed it without, you know, asking questions, then thank you very much. I really appreciate your time. Ladies and gentlemen, I shall see you on Friday. Yep, on Friday is always the same time. So stay tuned. Don't forget to like and subscribe. And as always, I keep on saying, you know, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. I'll see you on Friday. Bye bye.